Hey YouTube, and welcome back to Love for Crypto. Yesterday was the Paris FinTech Forum. There was a lot of predominant speakers there within the finance industry. Not to mention a head-to-head with the Swift CEO and Brad Garlinghouse, the CEO of Ripple. That was a very interesting talk. It actually ended with the Swift CEO announcing an integration partnership with R3. As you can see here from the official R3 Twitter handle. It caused an absolute stir throughout the community in regards to misinterpreting exactly what this means for XRP specifically. Before we go into that, there is something I want to highlight from this talk. I won't replay the entire video. It's on for about 14 minutes. If you do want to watch the video, then you will find it on our Twitter page. But I want you to listen very, 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 very carefully to what I'm about to show you.
100 years of resilient and good experience for customers.
Brad, what do you have to say to that?
Well, I think we are moving into a new world order. I think the Internet of Value.
And there you have it, ladies and gentlemen. Brad Garlinghouse, for the second time, pushing the New World Order agenda. It might not seem like a lot to other people, but I'll show you a clip. This is from our documentary that we made. We released this yesterday. And again, Brad Garlinghouse,
who's using Ripple's technology. They reduced the price per transaction to their consumers from $20 per transaction to $2 per transaction, and they saw an 800% increase in usage overnight. That's the type of dynamic that Swift isn't able to support that we're able to address right now, and that's something we saw just in the last couple of weeks. So we certainly want to see banks succeed in this new world order.
We certainly want to see banks succeed in this new world order.
And take advantage of these technologies. To the extent we can work with Swift to do that, then that's great.
Well, it makes me laugh because I remember back in the day, a good year ago or so, we started coming out, we started speaking about the New World Order, the one world reserve currency, the shift from the United States dollar moving into a digital reserve currency. Yeah, people laughed at us day in, day out, and I mean ridiculed us, blocked us, bad-mouthed us, made it absolutely apparent that we should be removed from anyone who follows XRP and Ripple, you know, because we're speaking about the New World Order. But, you know, it's funny that Brad Garlinghouse isn't receiving this open invitation for abuse. I'd like to think that the same people that was directing that hate and abuse towards Love for Crypto, I'd like to see them go and say the exact same thing to Brad Garlinghouse now, please, because, you know, he said New World Order not once, not twice. He specifically spoke about the world we are moving into. But, you know, as soon as Love for Crypto says that, you know, we should be discredited from everything that we've ever done in this space. So it's nice to see Brad Garlinghouse yet again reaffirming his stance on the New World Order, which is the direction we go into with the Internet of Value. We go into the even playing field, the globalist call, the globalist echoes that we spoke on and on and on and on about. Hence the reason why we made the documentary Globalization and Even Playing Field. As we step into this new world order, it's the only way possible for fairness and equality. So obviously, those are the two little clips for the NWO. I wanted to get that off my chest. I found it unbelievable to hear Brad say that again. You know, it was only over a year ago that we were seeing the same calls, you know, but we was ridiculed for it, and it's just funny to see how everyone's up on Brad Garlinghouse about this New World Order. Very highly contradicted from a lot of people in the XRP community, that's all we'll say. But moving onwards and forwards, we had Christine Lagarde there speaking as well, a little Thinking Crypto. I've retweeted this. If you want to see all this stuff's on our page, if you have a scramble through it, you'll see probably a lot of stuff. But this is what Christine had to say from the forum. So Christine Lagarde from the IMF, the managing director, specifically mentioning Ripple, with this new technological revolution that we are going through for the future of finance and fintech. And it's nice to actually hear Ripple specifically being named from Christine. I think that might be the second or third time now we've caught her saying that. So those are a couple of the takeaways from the speeches. We're going to get into this now. R3 are excited to announce our partnership with Swift Community to integrate GPI with the Corda Settler. Now, I'll be the first to admit I probably jumped the gun a little bit on this one. Thinking with my mouth and not my brain, or shall I say fingers, with tweeting. And, you know, put it out there. I think it said something like, for everyone who laughed at us to say Swift won't use XRP, blah, blah, blah. Got an absolutely load of shit for it off everyone, yet again. Because the argument is now that with the Swift API, we'll plug into R3 Corda so customers can use Swift GPI as a settlement functionality, or for the first option they could use XRP for settlement. So it appears that Corda R3, the Corda Settler, has now got two settlement options, one Swift GPI and one obviously with Ripple XRP. So again, this isn't exactly to say that Swift will be using XRP, so I need to throw it out there now. I've been getting a lot of stick from it, but there is some interesting takes further down here, and I think Stuart XRP, if you don't follow him, give him a follow. I think he says it perfect. Well, Swift did say this statement in the past, that over time our members can benefit from DLT solutions provided by Swift or third parties using Swift infrastructure connectivity. Looks like it's coming to fruition with Corda Settler. Again, it's imperative to understand that Swift are just a messaging layer. If a customer was to, let's say we've got a customer using R3, and R3's got the Corda Settler functionality available readily for the customer, then basically what this would do would, the customer would then obviously get prompted a decision, would it to use Swift GPI or would it to be use XRP, and we'd like to think that's the even playing field being distributed by R3 there. Again, Swift may well truly settle within a couple of minutes, but again it's still using that underlying nostril-vostral conciliation. When we talk about the 10 trillion trapped around the world in the corresponding banking infrastructure, there will be no release of these funds while still using the Swift GPI system. Whereas with XRP, if a customer is integrated with R3 and they know that they've got the XRP settlement functionality, then obviously they can maybe start returning some of that nostril-vostral capital back home, especially from in exotic corridors. And then they can start actually using XRP rather than having to pre-fund, and it is again bringing that money back home. It has an economic value to that tied up capital, which can obviously be used as stimulus in the economy, or it can be used for its respective owner of the capital from that account. But I think it's great. I think it's great that we've got R3 that have integrated both Swift and XRP, because moving forwards, as we've always said, it isn't just going to be one swift blow. We've gone from an old 1970s model to a 2019 model. It just won't happen overnight in that regards. But what we will start seeing now, if we've got, I mean, it'd be nice to get the statistics for R3, exactly who they do serve to, the demand. I believe they're operating for over 200 clients worldwide, very similar to what Ripple have on their sort of on their books for customers. But we have seen some very resemblances of the partners. In fact, they are very, very quite the same partners for both Ripple and R3. There is some differences, but again, what this enables moving forwards now, it enables the old settlement payment rails to be integrated alongside the new infrastructure. And if you can imagine, you're driving down the road, it's 30 miles per hour, and you try to replace your engine of your car whilst in transit, it's going to be a very, very, very difficult job. And this is the same scenario we are faced with the monetary system. You know, you cannot just say, right, we're going to change the monetary system, let's get it in the workshop for a couple of days, shut everything down, and, you know, we'll just do the transition, we'll change it all over, and voila, there you go. This is going to be an in-motion process, as we see a paradigm shift from old payment rails, old. I mean, I won't exactly call them old, but the old infrastructure, the SWIFT infrastructure, the 1970s model of analog transition of money. As we do go into the future, if we go into the instant settlement, and again, we've seen it all around the world with the Federal Reserve's Faster Payments Task Force, the European with the TIP system, they're all enabling faster payments. Now, if we can get faster payments, that means the velocity of money itself will increase. As an example, if you want to go through a sort of a start to finish process, you've got a consumer who's looking to buy products from an internet site. They then need to obviously order that product maybe from over China, from overseas. Then obviously China need to wait for that money before they can ship it over, and so on and so on and so on. And from the UK, if you actually order something from China, you can be waiting for anything from 15 to 25 days, and it's not because it takes so long for the product in transit to travel. It's how slow and clunky the way that money moves is what's restraining it. So if we could have something that could settle instantly, and let's even use Swift GPI for example. Let's say that we have got a world adoption of Swift GPI and everybody's using these faster payments and we're getting settlements, within the day, within 10 minutes. And we've got this entire chain process of what I've just explained to you with consumption from producers to warehousing for shipping. If we can get that cycle to complete instantaneously, then obviously the velocity of money itself will move a lot faster. And that actually increases systemic risk to using the Swift GPI system, because we've got counterparty issued capital tied around the world, the Nostro-Vostro reconciliation. And the more payments, more and more payments that we keep adding on to this old clunky system of Nostro-Vostro, it is actually increasing the risk of each of the payments. Now, obviously, we've got Ripple, who have gifted the Interledger protocol around the world to the W3C, to various different groups around the world that are implementing it, that are calling it their standard for the global standard. What you're going to be faced with moving forward into the future is, with instant payments, we will require instant settlements. And if Swift can go out and create an instant payment environment on their own with their own customers, for example, with Corda now they've integrated with R3, then Swift themselves are actually making a faster payments rail themselves. And a lot of people seem to think this is bad news. It is in fact good news for XRP holders, because long term it's an unsustainable model. It's an unsustainable model at the moment, but it works, and it has done for the past 40 odd years. There's nothing wrong with the system. In fact, it's served very well. If you would have introduced this back into the 70s, it would have been an absolute game changer for finance. But obviously, as technology evolves, this is the situation we are faced with. And now it just appears so much more relevant to be able to offer this instant settlement, worldwide, drop the fees for cross-border payments. And where people seem to think that this is a bad thing for XRP, in my opinion, it is perfect. It's Swift going out, building an instant payment rail that will spread around the world, that will require an instant settlement further down the line. And as you can see with what Stuart's saying here, that over time our members can benefit from the DL2 solutions provided by Swift or third parties using Swift infrastructure connectivity. What that's basically saying is, at the moment now, members can plug into R3. R3 have probably issued them a form of smart contract distributed ledger technology, which can do their messaging side for Swift now near instantaneously. If you want to look at it as sort of a SwiftX current version, is probably a good way of looking at it. But again, the biggest key point that everybody needs to remember when they take away from this, it does not solve the underlying liquidity problem. Which is a massive thing, especially when we walk in headfirst into an economic unknown. The market's maybe doing well at the moment, but it does appear that we're getting a lot of balance sheet reversals in regards of actually adding back to the balance sheets. We're hearing about QEs coming back. So in my eyes, the actual traditional markets, the Dow Jones, other different market sectors as such, could potentially breach all-time highs with this attitude of monetary policy, especially from the Fed yesterday. So that's just a little quick rundown, really. There's a lot of people out there in fact, there's fucking various people out there. It's non-fucking stop at the moment that are just going back and forth fighting this whole entire R3 and Swift. Yeah, fair enough. If people come out with incorrect information, I hold my hands up. Could be potentially one of them, but it's hard to stay embraced sometimes when you're hearing this information. But, you know, if anyone's in doubt, there's a tweet for you. You know, R3, Cordless Settler, Ripple, SBI, Ripple Asia, X-Rapid, T24, SAP, CGI, ACI, CLS, etc. It's getting boring now. Nobody should be doubtful at this point. And we got a tweet from Yoshi Kitao from his confirmed Twitter handle. 20 of the world's banks will incorporate XRP for international money transactions in 2019. Now, I'm sure those same 20 world major banks are using Swift GPI alongside the Ripple network. Again, it's all about that transition in motion, and it's about getting it right first time. So if we've got 20 banks that are dependent on Swift GPI because some of their other customers are dependent on Swift GPI, then they will continue to use the existing corresponding banking infrastructure that has had a couple of upgrades as of recent. But for the ones that want to go and explore those exotic corridors, that don't want to take on that risk of pre-funding another currency in regards to currency devaluations, then by utilising RippleNet and even by utilising XRapid, they only need to source liquidity from one place, and that is from XRP, rather than having the risk of the currency devaluations. That's not to say that XRP won't plummet down in price, but again, when you look at the Turkish lira and how it lost 80% of its value over a year, you could argue that that is a systemic risk to hold as a company who's looking to move money across borders. So I hope I covered that pretty well for you. Again, Swift GPI, RippleNet, although they are in direct competition with each other, there is only one real winner because Swift doesn't have a digital asset as such, a liquidity provisioning solution, and they are relying on the pre-funding of Nostro accounts. And as you can see, with all the downsides and all the draw sides to actually to using that system, again, it's worked. You know, you'll have very liquid corridors, euro, pound, dollar, but you know, when you want to start exchanging into African nation countries that haven't got that easeability and haven't got the direct peg to the other main currencies, it becomes really expensive, slow and clunky to do that. And again, if you've got 20 of the world's famous major banks incorporating RippleNet, they'll be the same members that are on Swift GPI. And it is all about this transition now from one network to another. And especially as the Ripple network effects start to take hold and more clients are on board using RippleNet, then we're going to see absolutely momentum gains this year. 20 of the world's major banks will incorporate XRP for international money transactions. Listen, this could be high volume, low value payments. I'm not denying that. It could also be on the flip side. It could be something much more. But according from the recent week from Mark Carney saying what's your space this year for FinTech, to Yoshi Kitao coming out and saying such things as he has doing, with Christine Lagarde from the IMF name dropping Ripple yet again, I think the path is clear for even Stevie Wonder. And on that note, ladies and gentlemen, it's been a pleasure.